morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well out there. And, well, I guess to taco or not to taco? Is that the question on this Tuesday? It's a Taco Tuesday. I don't know. Of course, I jest, but the meeting between China and the United States, I think, may wrap up today. Lots of talk back and forth that, hey, maybe we'll take away some tariffs if you send us rare earths, and we'll see. I'm sure a lot of people out there, if there is some kind of a deal, will go to the taco reference. I will say this: it does highlight, though, right, that rare earths appear to be a problem. And, of course, people have been saying this for a very, very long time. And I guess the Chinese had a little better hand than people thought, right? I mean, think about where we started and where we're at right now. The shipments from China to the United States, we got the trade data down 35%. A month. I mean, that's a lot. But they were up 21% in Germany, 24% in France. So China was maybe shipping it somewhere else, right? They ship it here. I don't know. But the old, there's always more than one way to skin a cat. Our toll-free number, 800-951-0592. One way to skin this cat: more gold, more silver, without a doubt. allamericangold.com is the website. It is down. I want to say not our fault. The company that we use to host All American Gold, they ran an update last night. And I don't know. You know how these things go. Something went wrong, or we do have a, because we do a lot on that website. We do have a custom code, so maybe there was something they didn't like. We're working on it. I guess that's a long way around to saying two things. Number one, we're working on it. Number two, Jason, I have no idea when it'll be back up. So this was whatever the problem was, I took a screenshot. I sent it to my tech guys. And it's never good when the tech guys go, oh, you know what? Can't identify. Yeah, we're going to have to get back to you. I'm like, oh, great. Yeah. Great, so it'll be up sometime. I don't know, today, tomorrow, next week, I don't know. But unfortunately, that doesn't help us for today, does it? But like I said, I think everybody's waiting. We've got inflation data coming this week. We've got jobless claims, right? That's another one on Thursday. So, Jason, I think this is the calm before the storm, right? They're okay, what's going to happen? Are they going to announce any type of deal? I hope so. At least as far as maybe knocking down a few of these things, wouldn't be a bad thing, but we'll have to wait for that. And so while we wait, I think everyone's just kind of catching their breath right now, saying, okay, what is going to happen next? And then Wednesday and Thursday, big days, we have a big 10-year note auction, and then one of those dreaded 30-year note auctions, which has everybody kind of on a little bit on edge, because those longer auctions, they just haven't been going well, right? And I think because most people are like, well, gosh, I don't even know what's going to happen between now and the end of the year. How can I make a determination of whether I want to own U.S. Treasuries for the next 10 to 30 years? And I think there's a lot of things. Listen, over the next 90 days, we're going to get a lot of clarity. How many trade deals are we going to get done? It's weird. We haven't – I guess we now announced, one with the UK, which Does anyone even care? No offense to the UK, right? But, I mean, what do they sell? Crappy cars? Range Rovers? I guess, maybe, right? I don't know. Jaguar? I don't know. What do we get? What do we get from the UK? I don't know. But outside of that, there hasn't been a lot of deals. We're still waiting on Congress to come with some sort of spending bill. And oh, by the way, no one wants to talk about it yet, but Jason, we're a few weeks away from the Treasury saying, hey, we're out of money.
Again. Right?
Oh, my God. Oh, you made me spit out my coffee. Yes. Again. Right. Get rid of the debt ceiling. See, if we just got rid of the debt ceiling, I guess we would know where the debt is at right now. We don't know. Like I said, I think we're closing in on 38 trillion. We may be at 38 trillion. I don't know.
Didn't they get rid of the debt ceiling? Remember the FOIA request? We had the Glenn Beck. He reported on it one time and then he never went back to it. Or they didn't print $5.5 trillion to bail us out in 2009. No, they printed $29 trillion. Is that ending the debt ceiling?
Yes.
Like ending the debt ceiling.
That was like a central bank thing, right? So they can say, well, you know what? That's a totally different pocket. You know what? That's not even the same pair of pants as far as the government was concerned. So, yes, it's a Taco Tuesday. Jason and I, we're going to be right back. 800-951-0592, Patriot Radio News Hour. Joe and Jason on this Tuesday. A quick look in. I said it's kind of calm out there. The Dow's up 30. The S&P's up 15. The Nasdaq's up 50. The 10-year note, 447, so down a little bit. Crude oil, unfortunately, not playing, up 76 cents, back to 66. I mean, hey, still way better than what it was, but crude oil now for about the last week and a half continues to go higher. Right now, gold is up, but not a lot, up a couple bucks here. 1,300, just below 13. Wow, how many years ago was that? 13. 33.30 on gold. Silver, the first down day in, I don't know, a week or plus more. Not down a lot, but at least a little bit. Try to get something going here. We'll see if we can find some silver out there. 36.35 right now on silver. Platinum also down a little bit. First time platinum has been down in a while. 1,215 on platinum, as again, we're watching all of these things, and I get, they're waiting for a deal. We got the riot. I don't even know if it's riot. I don't know. Whatever's going on in L.A. and more troops going there, and we argued on the half-empty cup whether that was a good thing or a bad thing. But when we look at silver and platinum, both of them breaking out, and I think for a lot of it, we've been waiting. Like, it seems like forever, right? We've been waiting and waiting and waiting. But really, when you think about it, silver has been on the move. When gold broke, right? When gold broke above 2,000, gold's been on this great run, and gold gets all the headlines, and rightfully so, right? Gold's up, like $1,500 in like 18 months. But people don't realize, Jason, what was silver? $17, $18?
About 18, yeah.
Right? It's now 36. It's not like it hasn't done anything. Obviously, it's done pretty well, but what is driving this latest breakout, and why is it that a lot of people, me included, think this is going to be a very fundamental change in the silver price is upon us. This is something when you go back and you look at the silver markets, particularly, going back to the 70s, we close the gold window, and we start looking at very, very long-term charts when it comes to silver, when we start looking at things like the gold and silver ratios, and you start putting those together with the supply issue, right? So silver has, as we know, silver has been in what we'll call a structural deficit. This is going on year 3. What does that mean? For the third straight year in a row, more silver has been consumed than has been mined, right? That, used to call that like economics 101, right? Supply and demand, right? And then economics 101 is pretty simple. When there's more demand than there is supply, price goes up. And the price will keep going up until what? Until we hit equilibrium. Right? What does that mean? Well, either the price has to go up high enough to cause the demand to go down, and or high enough that supply will go up. Right? Are there mines out there that maybe could be possibly reopened, or mines out there that maybe we can increase production once the price gets to a certain level? In other words, hey, we know there's more silver down there, but the grade of it, the amount of tons of dirt or rock that we have to move to get it, doesn't make sense at $36. But hey, maybe at $50 it will. We don't know, right? That's economics 101, right? Supply and demand. The forecast for economics 101 is to remain in this too much demand, not enough supply through the rest of the decade. That is what they foresee right now. That silver demand is going to outstrip the supply. But then so that's a great factor. You want that factor. When silver went to 50 in 2011, we didn't have that factor, right? That a supply-demand factor was in balance. In other words, we didn't have, matter of fact, for like 11 years, we ran supply surpluses. Now, those surpluses are all gone, but just to give you an idea, we didn't have that factor. So that's number one. Number two, long-term, and I mean long-term charts. 40, 50-year charts suggest that this is what they are calling a 40-plus year reversal. So what are they going back to? They're going back to, what was it, 1980. Silver touched $50. They said that silver essentially had been in a 40-year decline cycle. And I don't know if it really lasted 40 years, because right around the financial crisis, silver stabilized, and it's not been a straight line. And Jason will tell you that. I mean, we hit 50 again in 2011, right, as an example. But they're saying that this new chart is the big reversal chart. When we talk about why was it that silver was like the only commodity that hadn't hit an all-time high, they're saying this chart says it's going to now. This is going to be kind of the big breakout when it comes to the silver price. So, Jason, when we start thinking about how high are we talking about silver going, I think a lot of people need to really be prepared for a number well above 50. And then you start looking at the gold and silver ratio, right? So that's the third piece. We set an all-time record high last year. At, what was it, Jason? Was it like 123 or 124 ounces to one?
Yeah.
Right?
Yeah,
it was just really above 100. It was just above 100 like 2 weeks ago before silver took off. The average, and everyone debates, well, what should it be? And I always used 65. A lot of people use 50. 50 ounces of silver to 1 ounce of gold. And so when you come off a all-time record high like we've had, and right now you think about it, it's still at 91. You need 91 ounces of silver for 1 ounce of gold. And Jason, they're expecting in this leg up on silver that we are going to not only get back to the average, but probably surpass that. And remember in 2011, what did it get down to? Do you remember, Jason, when silver hit 50? Was it like 30-something to 1 at that point?
Yeah, well, if you had $50 silver and $1,900 gold at the top, that's 20 to 1?
38. 38 to 1. Okay. 38 to 1. Boy. I mean, right now, if you took, let's just say, 4,000 gold, be conservative here, when we get to 38, that would put silver at over $100 to the ounce. So this is one of the things when I'm sitting here and I'm like, wow, man, this is about one of the most expensive silver prices. Because when silver hit 50 in 2011, we couldn't even get any. Right? It was impossible. The mints were out. Nothing was available, right? No one could buy any, right? This time around, Jason, that is not going to be the issue. And the question is going to be how fast and how soon. But when we look at all three scenarios, Economics 101, supply and demand, hugely bullish. We've had that, though, for the last 3+ years, right? The 40-year silver chart signaling the reversal is now here, and expect silver to hit new all-time record highs. On top of that, the gold and silver ratio just came off an all-time record high, and they're saying, hey, that pendulum's going to come like a rocket ship. Are we going to see a doubling of the silver price between now and the end of the year? Jason, I don't know. None of us know. We'll have to wait and see. But very, very possible if you start thinking about we get trade deals done, the big, beautiful bill gets done, Congress starts spending like crazy, you can very easily see this come to fruition.
I think the commodities markets are very controlled generally, and I think that what we're going to see is that next wave of inflation. You know, and when the news starts talking about eggs again and the price of groceries going up dramatically again, then they'll try to sneak copper and silver and stuff up behind that and try to mask it. Because I think it's coming, just as you said, Joe. I think the price of silver, copper, and these other metals, I think they're I think those that build the world and those that make the decisions are trying as mightily as they can not to let that catch the headlines, because if silver starts going on a tear, remember, these are usually leading indicators, not lagging. Silver probably should be a lot higher than it is. So, they use these prices that we do on silver and gold are paper contract prices. It's, the spot price is not really a physical price. And so the physical price will shove the paper price up. It'll happen. So I think what they're doing, Joe, is you sell a whole lot of fake silver as long as you can. And then when this inflation, we're going to have a huge return of inflation. I think when the big beautiful bill gets passed, easy money starts flying around, talk of lowering rates, and then suddenly all that fresh money gets into the system, and the price of eggs go up, your groceries go up, and then silver and copper and platinum and whatever, they'll just kind of follow it. Try to mask the fact that that's a really good barometer of inflation, Joe. So doubling of silver can happen by the end of the year. I think it's very probable. Definitely by next year.
800-951-0592. Joe and Jason on this Tuesday. We're talking about silver. 5-ounce silver bars, $200. 1-ounce silver bars, $40. Rolls of U.S. silver eagles. It's insane right now, but $860 on a roll of U.S. silver eagles, silver rounds. I know. Well, I don't. The website's down, so I got to give you these prices here.
Last I saw was 810. 810.
Yeah. Well, I'm gonna do 800. I'm gonna do 800 on rounds. So you can get bars and rounds for $40 an ounce. I mean, that's like $3.50 over spot, right? That's nothing. It's nothing. Especially when we're talking about a scenario where all three major indices are pointing to this significant breakout. And when you go to, platinum, we've talked a lot about platinum. Guess what? It's the exact same thing. Matter of fact, the latest on platinum, remember I told you I think we're going to see $2,000 platinum. They expect platinum supply to be well short of demand through the rest of the decade. So both of these two metals, you can't go wrong. There's not a lot of platinum. We gave you the great deals that we had on platinum, and now those are gone. But on silver, just don't be surprised. Just saying that I get it. Right? This is the highest price that we've seen in years. The problem is silver's going to finally take out its previous all-time record high. And then what happens? Remember gold. Its all-time record high was $800. It took it out, kind of retraced, went to 1900 before it stopped the first time around. If silver does that, Jason, we're over $100. I mean, that's probably what, it's kind of funny when I was first starting here, silver wasn't even $5. I mean, it wasn't even $5. I think I sold my first roll of silver eagles for like $120, $125, something like that. We will probably see $1,000 rolls of silver eagles before the end of the year, and there's a very good chance that next year, the year after, are we talking a roll of silver eagles is $2,000? I mean, that sounds insane.
Well, a 10th ounce gold eagle cost as much as a 20 back in 2003, right?
Oh my God! Let me tell you, that's a great $410 on a 10th ounce American Gold Eagle Y2K. Eric and I, we had been friends for a little bit, and during Y2K, he was selling 10th ounce for like $32. $32. They're $410. So
how much was a 20?
Gosh, my first 20 I ever sold was less than $400. It was $300 and change. And I wanted to say that was like for a mid-state 61, 62, 63, something like that. Yeah, I mean, that now we're talking, add a zero, right? Add a zero. Yeah, I think it's coming, and I think it's going to come because of, at some point, we've got to get trade deals. At some point, Congress is going to spend a boatload of money. And just remember, the entire world fiat system, everybody wants to do the same thing, which is what? Grow out of it. It's kind of mathematically impossible, right? We used to be able to, when the deficit was 2 trillion, 3 trillion, 4 trillion, we could grow out of it. Notice how the higher the deficit goes, the more money we've got to spend, and the less growth we get. I mean, we're running a deficit of well over $2 trillion, and we're saying we can't grow fast enough if we're going to run a deficit that high. So let's run even higher deficits. That's the plan. Believe me, this is early in these rallies. Gold, I thought it was ridiculous. People talking about $10,000 gold. It's not ridiculous. It's not. Just not. It's not. We got $20 gold pieces at 35 and a quarter. Are you kidding? That's going to be like giving it away. That'll be like 20 years ago. What is it now? 22 years ago, 23 years ago when I started. A $20 gold piece was $300 and change. I think this is what 3,500 is going to be.
Well, Joe, you were around when 300 gold went to 1,000 gold. That's the same as 3,000 gold going to 10,000 gold. So by percentages, it's already happened.
Think about it. It did that in like a little over 3 years, 4 years. It tripled. And then in 8 years, it went from 300 to 1,900. What is that? How many times is that? 6 times?
Yep.
6 times? I mean, 20,000 gold? And here's the thing. It may do it in half the time. Right? Because Jason can say, hey, we double the debt every 8 years. Boy, it would make sense. Then, well, if that's the case, it's going to take half the time for gold and silver to double, right? Because the numbers are so much bigger this time around. I don't know if that logic is, I don't know if I'm using sound logic there, but it's possible. Yeah, for sure.
Well, gold and silver, it really is a leading indicator. It really is not a lagging. The reason it's a leading indicator is because those that build things and run the world, make all the big decisions, they have at their fingertips the real information of how things are going well before you see it on your news channel. So they buy gold before things go crazy. And if gold continues to keep doing what it's doing, the last 18 months, how crazy is it going to get?
800-951-0592. 1 ounce bars at 40. 5 ounce bars at 200. Rounds at 800. Silver Eagles at 860. Back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Tuesday. Remember, we're still waiting on that there's going to be some movement here with China and the U.S. on trade. Nothing yet. We've got inflation data this week. Jobless claims this week. So those are going to be two big things. Plus the dreaded 30-year auction at the end of this week. Got people, of course, got a big 10-year auction tomorrow. So lots and lots of other things for us to worry about. But today we've been focusing in on the other metal, silver, little brother, getting ready to make a power move that I don't know that we've actually seen before. I remember, I wasn't a little kid when silver went to 50 in the 70s. But I think that's the kind of move we're going to see here. And I don't know, will 50 be the new $5? Probably, right? Probably, right? That's kind of what the trend has been, right? 3,000 gold was the old 300 gold, right? $50 silver is probably going to be, right, the new $5 silver. And the problem, and really I don't know that it's a problem, but all the signs point to expect a price much higher than that on both of the metals. $20 gold piece is 34 1/4. 1 ounce, 5 ounce silver bars, they're at $40 an ounce. So 1 ounce is $40, 5 ounces $200, rolls of rounds $800. U.S. Silver Eagles at $860. At 800 951 0592, and as we sit here and we look at what is facing America now, another issue with the big bill, as the Senate pretty much, like everything else, hates all the savings. They all hate the savings, right? Remember salt. That was going to be a big savings. They were going to cap it at $10,000. Nope. Now it's $40,000, right? Got rid of almost all the savings. Medicare, Medicaid, right? They want to save almost $1 trillion. Of course, they want to do it later, but nope. No, I don't know. Wait a minute. No. That's going to affect my district, my state. And then we have a little provision in this that was another revenue generator to pay for at least some of the crazy stuff that they want to do. And that had to do with foreign investors in U.S. markets. They wanted to tax them. It was going to start at 5%, and by the end of it was going to be 20%. Okay, now, why would they do something like that? Because obviously that's nonsense, right? 5%, one thing. But 10 years from now, it's going to be 20%. So think about, why would any foreigner want to invest? Of course, because they know, the next president, he'll get rid of that, right? And we'll lose all the savings. Well, guess what? Apparently now, Jason, the Republicans are like, I can't vote for that. I can't vote for that. And I don't know where any of these savings that they're claiming are going to come from. It looks like what we're going to end up with is nothing more than, we're just going to have to say we're going to grow exponentially because all of the savings we wanted to put in there, nobody wants to vote to cut anything.
No, it's all a mirage. It's fake. They're there to spend more money. They all know that the money is fake. If it's fake money, then there's no such thing as spending too much fake money. So just keep on doing it, right, Joe? Just keep on doing it. And there'll be a day of reckoning. It'll probably be disguised as something else. And then they'll come up with a whole brand new system. Hey, like, we got a whole new way of spending too much money. But now we're back at a point where everybody can afford to make their debt payments. Because that's all it is, Joe. It's slavery. You know, the lender is the slave owner of the borrower, and the borrower is perpetually spinning their wheels trying to figure out how to pay their debt. You know, it's one thing to borrow money and do something beneficial, but it's another thing to borrow money and then 20 years later you're still paying on that taco, right? That's slavery.
Right. Yeah. I mean, think about it. Can you afford to buy a house? Can you afford to buy a new car? Right? These are things that the vast majority of Americans can't do. Right? We've got this great economy with an unemployment rate of just over 4%, and yet we still got 40-some million people on food stamps. And that's just a fact. And it's going to get worse. I hope you're ready. I hope you understand what's coming. I hope you're at least thinking about, if you haven't done it yet, getting in on TEXIT, because guess what? There's going to be something new. And it's going to be digital, and they're going to somehow try to tell us that it's going to be better this time around. I don't know. You know, I would love to see decentralized currencies come into the world and ending of the world banking system. That'd be my happiest day ever. You know, I don't know that it can happen, but guess what? The opportunity's going to come. 800-951-0592. Final segment coming up. 800-951-0592. Patriot Radio News Hour wrapping up this Tuesday. Again, big long-term developments when it comes to the silver charts, the platinum charts. Get ready. If you haven't done, and I get it, right? Silver's, it's heavy, right? It is. Can be a pain, but man, is it going to run. 1 ounce silver bar is $40. 5 ounce silver bar is $200. Rolls arounds at 800. Silver Eagles at 860. At 800-951-0592. If anybody has a case of Silver Eagles, right? I'm buying them at $19,250. If you want to do that, if you want to trade gold or silver for some TEXIT, we can do that for you. We can do just about anything, right? But if you want to get prepared for what is coming, that's what it's going to take, right? You're just going to have to accept that this is the path. I didn't pick it. You didn't pick it. None of us voted for this. But this is what banking is. This is the banking system. It is doing exactly what it is that it was intended to do, which is what? Go to zero. That's what it's intended to do. And that's exactly, Jason, what we're going to see. And we are seeing it play out. And anybody who doesn't think so, right, Jason, they just don't want to admit what is right in front of their face. You call it slavery, right? Because let's face it. Look how expensive it is to live and how much more expensive it's going to get. And that's kind of what it is at the end of the day, right? Everybody still wants to believe they're middle class. And, Jason, I think over the next 4 or 5 years, we're going to see another great exodus coming out of the middle class. Unfortunately, it's not going to the upper class division. It's going into the poverty division.
How much freedom can you afford? That's literally how it is. And really, we enslave ourselves. It's really mostly our fault, because the things that you want and the lifestyle that you prefer, wherever you got that idea, that's what you have to go earn money for to achieve, right? If you're Rambo and you can just live in a mountain, and sleep on a rock and eat a pig after you spear it with your knife. It doesn't cost a whole lot to do that, but there's not a lot of people that are listening to this radio show that's their lifestyle, right, Joe? So, do you have the family? Do you want them to go to school? Do you want to buy a car? Do you want to get a house? What is it that you want to achieve when it comes to your daily and yearly, every decade, what your life is? There's a cost to that, and we use currency. And if you hold on to a bad currency, you lose value. And then we don't have any currency, you borrow currency and become enslaved to your lifestyle. So whatever it is you like to achieve out there, you better get your finances in a better spot so that you can enjoy the things you've been slaving over, right, Joe?
Amen to that. 800-951-0592. Jason and I, we're coming right back.